Okay, so I'll just give you a rundown of this trade. Two trades actually. So when I got on the chart, first thing I saw was this, and pretty much a new hourly candle that opened after this one. Okay, so what caught my eye was this 1 hour here and 1 hour bullish order block in terms of candle point of view. I do have different points of view for PD arrays, right? So one is in terms of what is the next candle going to do, and then the other is in terms of the whole PD array matrix, and also generally also structure as well. Okay, so it may sound a little bit confusing, but it's not. And when you start to see things that way, which I will eventually lay out, yeah, it becomes a lot easier to see. So we have this 1 hour bullish order block here, and I saw this, so I think I got in somewhere around here. Actually, yeah, correct. So if I play the next candle, so what I was anticipating is price heading towards this level here. Okay, so if I got in on, let's say I saw this candle, this would have been my first target. Okay, being in my grading system, it's first target, the external range liquidity of the next consequent candle. Happens most of the time, even without bias, as long as you're not trying to long a top of a overall higher time frame move. So target 1 and target 2 is an opposing PD array on the same time frame, which is this CB, right? In this whole range. What is the next premium array? Nothing here, nothing here. This one's the next premium array, okay, for this 1 hour order block. Okay, so price comes up and then it comes down. Can you see how red it was at one point, which can be scary, right? If you're inexperienced. But it comes to here, and boom, comes down and creates technically another order block here. All right, so that was my first target hit. We'll see the executions later. So at that point, I went to a higher time frame. Just to point out, you know, this is the first target. Here it's too low. I got in at this candle, so it doesn't count. But let's say I got in at the close of this candle, or even down here, 6 pips. It's not a lot. So, but if I'm doing this on the hourly time frame, not hourly. If I'm doing this on the daily time frame, for example, then I have the opportunity of going to a lower time frame and getting that high probability target by entering on a lower time frame. All right, so just keep in mind, we remember us discussing on our call that this area on the 1 hour was quite interesting to me, and we had a 2-day gap in here as well. It's not highlighted here, but if you go into 2-day, that's where I thought price may want to go. And these relative equal highs from this weight to this weight. Nice open void here. From experience, yeah, that seems like a good place for price to want to go to, and just my general experience with EURUSD and, you know, having that relationship with it. So at this point, that trade's done. Total of 16 pips or so. I got with 2 lots. And if we go on to the 4 hour, I saw this, right? So let me delete these targets. Now this over here is a nice 4 hour order block. So first target, the external range liquidity of here, okay? And then second target, I would target obviously this high, and it would be a higher time frame PD array. I don't want to go to the higher time frame because it's going to show the candles, but basically, yeah, definitely a swing high like this and coming into that 2-day CB. Okay, that's the next target. So 4 hour, nice. I like that. What I want to do is anticipate a retracement down and then higher. It doesn't have to do that. It could just come in here and then there. But I believe I got in on the retracement quite deep. Okay, so you see how that 4-hour candle came all the way down, and then it shot up and closed here. So I bought somewhere down there and almost got stopped out, but I felt that this low should hold. But you know, I could have put it down there to be a little bit more safer, to be super safe, you know, down there. But generally, this should hold because we have the bodies here, we have multiple structure here, and I was anticipating this weight not being broken and not going too much, at least not too much before after consequent encroachment. By all means, it can, but in this case, I didn't get stopped out, and at the very least, my trade idea, was valid. So now I want to target here, just at the high. I like to just at the high because sometimes, you know, like you see those equal lows, they get pierced by a little bit and then they reverse. That's annoying to have that happen to you. And sometimes my take profit is a little bit before, because sometimes price creates those equal highs without even breaking the top. Okay, but in this case, yeah, I'm quite confident. So low hanging fruit objectives is what I try to aim for as my first targets. Okay, see, came all the way up, created those equal highs, came down, and then came up again. All right, and then profit was taken there. Let's see where. Pretty much at this candle, yeah, pretty much at that high. Okay, so this is not where I entered the 4-hour trade. It was somewhere down here. The stop loss. I just entered with 2 lots. I'm not counting the RRs or anything. It's just 2 lots here, which is 200,000 units. 1 lot is 100,000 units. Okay. Then it came down here, back into the 4-hour, and then it went from there, right? But you can imagine that 4-hour red candle. Ignore this position. Ignore this position. But let's say this is happening. Came up to this order block. It's coming down. What would one person normally do? Try and target these equal lows or those swing low, right? Displacement down over the manipulation, breakaway gap. But yeah, that's where the higher time frame, viewing things from what's the next candle going to do. Once you can do that, people will be, you know, they'll be wondering like, what is this? What is this black magic? How did you know it's gonna like come back up? You never know for sure, but you see that happening. One thing to point out, there's a nice equal lows down here, so it created even more here, and then finally took it out, and it goes up from here. Okay, so it came into this gap. Okay, relatively strong kind of gap because of the breaker. So you normally do get a reaction. So it comes and takes out the previous 20-minute low, consolidates a bit. Okay, up into here. I was not looking at this 20-minute, but let's see if we do get a retracement into this gap right next candle. So price is bouncing, actually doing this from candle to candle, and then it goes to the higher time frame. So when I'm on a lower time frame, then I'm just looking for kind of like a refined area where price may go to, but always based off that higher time frame candle. Okay, I'm not just looking at the chart like this and thinking, where am I going to target? I have that 4-hour. This is based on the 4-hour. What's the next 4-hour candle going to do? That's it. Let's see if we do get a retracement into here. And let's see if the body is respected. And there we go. Okay, so now we're here. You see? Next candle, in, out. That's it. And then that's how, at times, we can also anticipate a breakaway gap. See the gap here? Why is that gap not getting traded to? Because it traded into this inversion gap. So there's a flow and an order. And you know, when you have multiple PD arrays on this kind of level, like candle level, for example, let's say it does come into a BC in here, plus the inversion gap, let's say it's an order block or yada yada yada. When you have more confluences, that's the better. right? Compared to retail indicators like moving averages, good RSI on there, Fibonacci, stochastic. Having more indicators in that kind of scenarios is bad. More confluences. It does not mean better trades, but when using these type of concepts, ICT's concepts, more confluences definitely means a higher probability trades. Okay, so let's go back to the 2-day. Okay, yes, right. So nice. We are in the 2-day gap, 2-day CB, which is here. You can see it here. Okay, this 5 hour is just a POI for where I think price is going to go to before potentially reversing. By all means, it could come all the way to here. We still have 20 hours on the 2-day. So often at times, with then, keeping the bodies telling the story, wicks doing the damage kind of concept. When a candle's like nearing the close, you can kind of judge what it's kind of going to do as well, right? If let's say we're bearish and a few more hours left and price is like up here, then price has been crawling up, creating all this liquidity, no real structure, and a high impact news is coming up. Those things can be put in line with what you're anticipating in price, so you can actually anticipate the formation of PD arrays before they even happen, right? I mean, not many people are able to do that. Can trade a PD arrays, but anticipating a breaker being created or an order block or a fair value gap, I think that's an additional level, and having the insight is quite useful. So okay, just to look at this, we are at a discount from this range. Okay, so we could come into a premium, or maybe not yet, right? This thing can keep pushing down and your fib gets extended, and eventually it comes back to like an OTE, etc., etc. But now there's too few candles to expect a really deep retracement. One common thing that may happen, so this is just predictions or possible scenarios, price comes back up to this trend line and then drops, okay, in those cases, or comes back up to this old low, so previous support now or resistance kind of thing. But generally it's an overall breaker in this area compared to this entire this big move, right? If you go to the weekly is in 3 days, so let's see if we create a weekly gap. All right. There's no inversion gap here. For inversion gaps, I may use one that's moderately far away at times. I don't know about this far, but maybe in this distance, for example, this trade back up into this volume imbalance, I may use inversion gaps like that. But for fair value gaps, breakers, I do look at the next candle. So it's like the past couple, one or two candles where that PD array has formed. Okay, I mean, you can see this kind of thing happening everywhere, right? Okay, for our weekly here. Weekly, nice. We had a discount. What can we anticipate? We get this weekly candle, and then now we're here. Okay, we're in, and then anticipate trading into. Okay, there's an additional gap here, which we can study on a higher time frame. Let me just highlight this. Two-week, 3-week, 4-week, 5-week. Okay, not too much on there actually, but in this case, no PD arrays here. Don't forget that going back to a premium is one of the targets. So first target can be here. In this case, we create another BC here. Not a bad one with an order block. When price comes down here, we can anticipate a possible move higher, and then it breaks down from there. Okay, here's a bit choppy. It doesn't take out the high, not for now anyway, but comes all the way down. At that point, I'm not expecting it to come back up to the high. It made a decent run up. Now it made also an equally or even faster run down. What does that mean? It wants to more inclined to trap traders on that side of the market and seek liquidity on the buy side, which would be the sell side, sorry, which would be down here. And if we take in consideration again this entire range, equilibrium would be down here. Actually, it's down here. Okay. And also there's a higher time frame gap here. 6 months maybe? No, 2 months. 1 month. Okay, there's a 1 month gap. 2 month traded into here. This is not anticipating what the next candle is going to do because there's multiple candles away. I would have to keep transcending the time frame, and there's nothing there at the moment. Okay, so, and you can see in this instance, it just kind of chops back and forth. On this time frame, there's nothing, right? Because there's this entire range here, this CB, which is apparent on the 6, 7, 8, 9, even higher time frames, right? Even higher time frames, which is now in effect. Okay, on the monthly, yeah, this whole consolidation, where's it gonna go? Just go to higher time frames and see what the next candle is gonna do. And you can just you can go down all the way and kind of pinpoint where you are in price by using this method. And you may not always know where you are, and it may not always be clear. Sometimes there's no gaps, there's no clear order blocks, there's no clear liquidity. Price is trapped in some sort of time distortion. Then just don't trade. Yeah, simple as that, really. Okay, so I hope you found that useful. Just let me know if you have any questions on that.